You just moved to the UK, you've got a job, you've got a flat, maybe you've got a national insurance number. That's a special number the government gives you so they can track your earnings and your taxes. And you're thinking, I'm sorted. But you're not. Because nobody, not your employer, not the government, not even the friends who've been here for years, is going to sit you down and explain how money actually works in this country. And that silence, it costs you. Not in some vague way, in real money. Hundreds of pounds, sometimes thousands. Quietly leaving your pocket every month because you didn't know the rules of a game nobody explained. Today I'm walking you through the 5 biggest money traps waiting for every newcomer to the UK. I'm going to explain each one from scratch. No jargon, no assumptions, nothing you need to already know. Just the things nobody told you, explained simply. And for each one, I'll tell you exactly what to do about it. Let me paint a picture. You get your first UK payslip. A payslip is a document your employer gives you every month. It shows how much you earned and how much was taken out before the money reached your bank account. You expected £2,500, but only £1,990 landed in your account. Where did the rest go? Some went to income tax. That's the money the government takes from everyone's earnings to pay for things like hospitals, roads and schools. Some went to national insurance. That's another payment to the government. It helps pay for things like the NHS and your state pension when you're older. And some went to your workplace pension, which I'll explain in a minute. The point is, over £500 left your pay before it reached you. And most newcomers have no idea where it went or why. And on top of what's taken from your pay, there's a bill coming to your home that nobody warned you about. It's not in your work contract, it's not on your payslip, it just arrives in the post. And for most newcomers, it's a genuine shock. You're probably thinking, I'll figure it out as I go. Everyone does. But here's the problem. Every month you don't understand this stuff, it costs you, in actual pounds, leaving your account. That didn't need to leave. So let's fix that, right now. Here are the 5 money traps waiting for every newcomer to the UK. I'm going to explain each one from the ground up. You don't need to know anything about UK money to follow this. That's the whole point. Trap 1. The tax code lottery. In the UK, when you earn money from a job, the government takes a portion of it. That's called income tax. How much they take depends on how much you earn. But here's the important part. You don't pay tax on everything you earn. The first £12,570 you earn each year is completely tax-free. That's called your personal allowance. Think of it like a shield. The first chunk of your money is protected. Now, your tax code is a short code, a mix of numbers and letters, that tells your employer how much of that shield you get. The most common one is 1257L. The 1257 part means your tax-free amount is £12,570. The L just means it's the standard code. Simple. Your employer uses this code every month to work out how much tax to take from your pay. If the code is right, the right amount of tax comes out. If the code is wrong, the wrong amount comes out. And here's where the trap catches newcomers. When you start a new job, and you're new to the country, HMRC, that's the government department that handles taxes, like the tax office, often doesn't have enough information about you yet. So instead of giving you the correct code, they sometimes put you on something called an emergency tax code. One of the worst emergency codes is BR. BR stands for basic rate. And what it means is this. Every single pound you earn gets taxed at 20%. No shield, no tax-free amount, nothing protected. 20% of everything. Let me put that in real numbers. If you earn £2,500 in a month and you're on the correct code, you'd pay roughly £250 in tax. But on BR, you pay £500. That's £250 extra, every single month, going to the government that didn't need to. And the worst part? Nobody rings you. Nobody emails you. Nobody says, hey, we've put you on the wrong code and you're overpaying. It's on you to spot it. And most newcomers don't even know to look. The good news? It's fixable. And if you've been overpaying, you can get the money back. Now, that's bad. But the next trap? That one hits you at home. Literally. Trap 2. The council tax ambush. Let me explain what council tax is, because if you're from another country, there's a good chance you've never heard of it. In the UK, the country is divided into local areas. Each area has a local council. Think of it like a local government for your neighbourhood. This council is responsible for things like collecting your rubbish, cleaning your streets, keeping the streetlights on, and helping to fund local police and fire services. And they pay for all of this by charging every household a monthly bill. That bill is called council tax. Now here's why it shocks newcomers. Council tax is not included in your rent. It's separate. It's not deducted from your pay. It's a separate bill that comes to your home. And nobody, not your landlord, not your letting agent, not your employer, is required to warn you about it before you move in. How much is it? Every property in the UK is placed into a band from A to H. Band A is the cheapest, Band H is the most expensive. Most newcomers fall between Band A and Band D. In practical terms, that means roughly £100 to £200 a month. In some parts of London or larger cities, it can be more. And here's the part almost nobody tells newcomers. If you live alone, the only adult in your home, you're entitled to a 25% discount. It's called the single person discount. But here's the catch. They don't give it to you automatically. You have to apply for it yourself. If you don't ask, you don't get it. And that could be an extra £300 to £500 a year you're paying that you don't need to. As soon as you move into a property, contact your local council to register for council tax. You can find your council by typing your postcode into gov.uk. If you live alone, ask for the single person discount when you register. And budget for this bill, £100 to £200 per month on top of your rent. Alright, 2 traps down. But here's the thing, the next one isn't a bill. It's money you're already losing without knowing it. Trap 3. The pension you're ignoring. Okay, this one confuses a lot of newcomers, so let me start from the very beginning. A pension is a pot of money that you save for your retirement. The idea is, you put a little bit of money in every month while you're working, and by the time you stop working, you've built up a nice pot of money to live on. Now, in many countries, pensions are optional. You choose to save or you don't. But in the UK, pensions work differently. In the UK, if you're employed and you earn above a certain amount, your employer is legally required to put you into a workplace pension. This is the law. It's called auto-enrolment. And here's the key part. It's not just your money going in. 3 groups contribute. You put in about 5% of your qualifying earnings. Your employer adds another 3% on top. And the government adds tax relief, which is basically a bonus that means the money going into your pension isn't taxed. That employer contribution? That's free money. It's extra. It's on top of your salary. Your employer is legally required to give it to you, but only if you're in the pension. Now, you're probably thinking, but I'm not going to stay in the UK forever. Why would I save into a UK pension? I get that. But here's what most newcomers don't know. If you leave the UK, your pension pot does not disappear. It stays. It's still yours. It sits there and continues to grow until you're old enough to access it, no matter where in the world you are. And if you opt out, which many newcomers do because they don't understand what a pension is, you're giving back that free money from your employer. It's like your boss sliding an extra 3% of your salary across the table and you saying, "No thanks, I don't want it." Ask your employer or your HR department whether you're enrolled in the workplace pension. If you opted out when you started, ask to be re-enrolled. Even if you plan to leave the UK one day, the money is still yours. Don't give back free money. Okay, 3 traps. And I know what you're thinking. How many more ways can this system catch me out? But the next one is different. This one isn't about what the system takes from you. It's about what it charges you without you seeing it. Trap 4. The banking blind spot. When you arrive in the UK, one of the first things you'll do is open a bank account. You need one to get paid. Most newcomers walk into one of the big high street banks. Barclays, HSBC, Lloyds, NatWest, and open a basic current account. A current account is just a bank account for your everyday spending. Money goes in, you use your card to pay for things. Money goes out. Simple. And for day-to-day banking in the UK, those accounts are fine. But the moment you start sending money to family back home, and most newcomers do, those same banks will quietly charge you in ways you don't see. When you send money to another country, two things happen. First, the bank charges you a fee for making the transfer. That's usually £15 to £25. Second, and this is the hidden one, the bank gives you a worse exchange rate than the real rate. The difference between the real rate and the rate they give you is called the markup, and it's typically 3 to 4%. You don't see the markup as a separate charge. It's baked into the exchange rate. So it just looks like the rate. But it's not the real rate. The bank is taking a slice. Let me put real numbers on it. Say you send £500 home every month. Through your bank, the hidden charges are roughly £40 to £50 per transfer. Over a year, that's £480 to £600. Gone. On charges you didn't even know about. Now, there are services designed specifically for international transfers, companies like Wise or Remitly. These services use the real exchange rate and charge a tiny fraction of the fee. The exact same £500 transfer that cost you £42 at your bank might cost £3 or £4 through Wise. This is one of the simplest money wins for any newcomer. You don't have to change your bank, you just use a different service when you send money abroad. If you send money abroad, don't automatically use your bank. Compare the total cost, that's the fee plus the exchange rate, against a specialist transfer service like Wise or Remitly. You can check the real exchange rate on Google by searching GBP to your currency. If your bank's rate is more than 1% different, you're being overcharged. Okay, 4 traps. But I saved the most important one for last, because this one isn't about a single bill or a single fee. This one is about the entire system. Trap 5, the silence tax. And this is the one that changes everything. Because every single one of those 4 traps I just described has something in common. The information existed. It was out there, somewhere, on a government website, in a booklet nobody reads, in a guide written in language that only makes sense if you already understand it. But nobody delivered it to you. Nobody walked you through it. Nobody said, "Hey, you're new here. Let me show you how this works." I call this the silence tax. It's the price you pay for every piece of information that exists somewhere in the system, but was never delivered to you in a way that made sense when you actually needed it. HMRC has a guide about tax codes. It's online, but it's 30 pages long and written for accountants. Gov.uk explains council tax, but it assumes you already know what council tax bands are, what your property valuation is, and how to contact your local authority. Your pension scheme has a booklet, but it's full of words like qualifying earnings and auto-enrolment opt-out window that mean nothing if you're new. The silence tax is the most expensive trap of all because it compounds. Every month you don't know about your tax code, you lose money. Every month you don't claim your council tax discount, you overpay. Every month you're opted out of your pension, you miss free money. And every time you send money home through your bank, you pay charges you didn't need to pay. The system doesn't send you a reminder, it doesn't send you a warning, it just keeps taking. That's not your fault. But now you know. And that changes everything. Now, you're probably thinking, okay, 5 traps, got it. But where do I even start? There's so much to know. And that's the real problem. It's not that the information doesn't exist, it's that it's scattered across 50 different government websites, written for people who already understand it, and nobody stitches it together into something that actually makes sense for someone who's just arrived. I call this the newcomer penalty. It's the cost of trying to navigate a system that was never designed to explain itself to you. And this channel exists to eliminate it. Every week, I take one piece of the UK money system and I untangle it. No jargon, no assumptions, no "you should already know this." Just clear, simple explanations. Like someone who's been through it is sitting next to you and walking you through it. Quick note before we go on. I'm not a financial advisor, I'm a researcher. Everything on this channel is financial education. That means I'm here to help you understand how things work, not to tell you what to do with your specific money. For advice about your personal situation, speak to a qualified professional. I've put links to free guidance services in the description. So here's what to do right now. 5 things. 20 minutes. That's all it takes to start closing those traps. 1. Find your payslip. Look for your tax code. If it says BR0T or has W1 or M1 at the end, contact HMRC. It takes one phone call and you could be owed hundreds. 2. Contact your local council and register for council tax. If you live alone, ask for the 25% single person discount. That's £300 to £500 a year you won't have to pay. 3. Ask your employer whether you're enrolled in the workplace pension. If you opted out when you started, ask to be put back in. That employer contribution is free money sitting on the table. 4. If you send money home, compare what your bank charges against a specialist service. Even switching one transfer could show you the difference immediately. And 5. Grab the free pounds and cents starter kit. It walks you through all 5 of these checks step by step, with screenshots, links, and plain language instructions. 20 minutes. Link in the description. And one more thing, drop a comment below. Tell me, what's the one thing about UK money that confused you most when you arrived? Or if you've been here a while, what do you wish someone had explained on day 1? That's how I decide what to untangle next. You move to a new country. You're building a new life. And the money system here wasn't designed to explain itself to you. That's not your fault. But now you've seen the traps. You know what to check. And every week, I'll be here untangling the next piece. Subscribe and hit the bell. The topics on this channel build on each other. Miss one, the next won't land the same. This is a journey. Next week, we untangle the invisible tax that's stealing your pay rise. You got a raise, but your take-home barely changed. I'll show you exactly why and what you can do about it. That's pounds and cents.